I'm back for more earnings charts, and I brought five stocks that you should watch this week for their earnings reports. And you might think it's all banks to start us off this week, but it really isn't. There's a bunch of other stocks that I think you should be tuning into because they're going to give us a bigger, broader view of the economy than just the banks. But we are going to talk about one of the big banks, the premier one, or the one that everybody likes to focus on because of its CEO. And let's lead off with that bank right now. So who is it? It is JP Morgan Chase, ticker JPM. And I'm going to bring you the Zacks and price and consensus chart plus the earnings surprise chart. I do like this chart. It overlays a lot of data all in one place. Of course, we're concerned with the earnings surprises, and you can see all these green arrows here and here. They've only missed 3 times in the past 5 years. That's a very good track record. 2 of those misses came right when the Fed started raising rates here in 2022. But look at the price and consensus part of the data on here. That's these little lines that are going up and to the right. That's what we want to see. That means rising earnings estimates here as the stock itself is also rising. So we have a nice combination here of a lot of earnings beats and the earnings on the increase. PE now for JP Morgan is 14.1. The shares are down a little bit over the last month, but not as much as some other stocks, down just 1.1% over this little pullback we're seeing in December and here to start in January. They do pay a dividend yielding 2.1% on JP Morgan, but you want to tune into this one to see what Jamie Dimon is going to say about the economy. He is always front and center and very open with what he sees are some issues in JP Morgan's business, but also just in general about the economy. So I'm going to be tuning in. You should be too. This is JP Morgan Chase, ticker JPM. Then we're going to switch over to a kind of I guess you could call it controversial stock, BlackRock, ticker BLK. They don't own all the real estate in America, despite a lot of misinformation there. They are an asset manager. They have mutual funds, ETFs, and because of that reason, they own shares in a lot of real estate firms and home builders and whatnot, but they don't own them outright. Now, this is an interesting chart, just 2 misses for BlackRock, one again here in 2022, and then back when the pandemic started. We're almost about to lap the start of the pandemic. I know it's hard to believe, right? But we're going to see a lot of still earnings misses there in 2020 when the pandemic hit. But otherwise, quite a good track record. Now, look at these price of consensus. You see it is up and to the right, but some big earnings growth in here, even expected through 2026. PE now is 20 on BlackRock. The shares are down about 10% in the last month. So maybe a little bit of a buying opportunity on this correction here. Dividend yielding 2.1%. So that's BlackRock, ticker BLK. Then we're going to switch over to insurance, but health insurance with a company that's been in the news for not so good reasons. United Health Group, ticker UNH. This is one that has always been in the spotlight, and you can see all those green arrows going back 5 years. They haven't missed in 5 years. That's impressive because it does include the pandemic years when things were very difficult for every company. But look at these earnings, just very consistent earnings growth year over year. We see a little bit of weakening here for 2025 and a little bit in the consensus for 2026. PE is still at 17.5. It is down about 7% over the last month. So a little bit of relief there. dividend yielding 1.6% on UNH. But of course, it's been in the spotlight due to the tragedy of its president being murdered there. So we are watching UNH closely, and this one is going to be on the watch list. Then we're going to switch over to JB Hunt. And this one is on the transportation side. Very interesting area. Now you can see it's a Zacks number 4 there, but look at what's been happening to the transports. Lots of earnings misses here. Just bunches in a row because the transports have been in a recession, or some have said even a depression. This is logistics and trucking. And look at these earnings just plunging, but looks like it's stabilizing a bit with a little bit of earnings growth expected here in 2025. And then 2026 looking a little bit better. Those experts in the industry have been saying that they want, things to look better for this year, and they're expecting them to be better, and that maybe the worst is over in the trucking side. Now, these shares, interestingly enough, didn't really break down. We had a lot of testings of these lows here over the last 3 years, but never breaking down back into these pandemic levels. So maybe we're just not going to see that. PE is at 23.9, so still a little bit elevated considering the decline in the earnings and how bad the market has been in the trucking area. Shares are only down 4.1% over the last month because the street is anticipating, a recovery now here in 2025. They think the worst is over. So we'll be watching this one pretty closely to see if that confirms. They did beat last quarter here, not by a lot, but 4.9%. But that was the first beat in several years. So we are hopeful that they're back on the right track, but not that cheap for these shares. So that's JP Hunt, ticker JPHT. And then we're going to have one that is my favorite, Fastenal. This is a construction and manufacturing stock, also a Zacks number 4 rank here going into this earnings report. Great earnings surprise track record. So they last missed this year or last year, barely 1.9% in April. And then prior to that, their last miss was all the way back just before the pandemic started, actually, with a January 2020 miss. But then they were in favor during the pandemic because they sell the masks and all of that, and because they're used in construction. So that helped boost earnings. And now manufacturing and construction has returned, but manufacturing still on the slowest side. And you can see the analysts have brought back down their estimates here a bit because they were ultimately bullish a couple of months ago and now getting a little more bearish, but still this does show some earnings growth. So will manufacturing come out of its recession? We will see if they have anything to say about that. They are a bellwether for manufacturing. So that's why I'll be tuning in. Shares, you can see right here, down about 11% in the last month. So they have had a nice correction here, but still fairly expensive on a PE basis, over 30 times on a PE basis. That's what's kept me out of this stock. I want to get it cheaper, but over 30 times for growth, but not great growth, is just a little too pricey for me. Dividend, it does pay one, yielding 2.2% right here. So I'm going to be tuning into Fastenal, as I always do every earnings report, to see what is going on there. But a little bit of a buying opportunity. Will this prove to be a good place to get into these shares? And is manufacturing finally going to come out of its, stalled space here in 2025? We'll see. But the market is hopeful that both the manufacturing and the trucking in the form of JP Hunt is through the worst of it and is going to come out on the other side here in 2025. So I'm keeping an eye on all of these charts. These are the must-see charts for this week. We don't yet have any of the Mag 7s reporting. They're coming soon here in January and February. So be sure to subscribe to our channel on Zacks.com, on YouTube to get all of our videos. I'm going to be bringing you these charts with the must-see stocks every week here during earnings season as we roll along. And of course, I'll be bringing you the Mag 7s. They've had an interesting start to 2025 as well. So you don't want to miss a single episode. Get us somewhere. You can also get a lot of these earnings charts on my Twitter, my Blue Sky, my StockTwits accounts. I'm going to be tweeting them out on all these locations. So be sure to get us somewhere, and I'll see you again next week with some more stock charts.